Adam Button, Chief Currency Analyst at Forex Live. Good to see you, Adam.
Hi, Greg.
So these are strange times. Correlations that have worked in the past don't seem to be playing out, at least in the past couple of trading sessions. What are you seeing out there?
Right, it's that old playbook of risk aversion. You buy the dollar, you buy the yen, and over for the past decade that's worked. But the playbook has changed in politics, it's changed in markets, and whatever portion of this sell-off is due to the trade war, well, that's why the correlations have broken down. That there isn't that confidence in the dollar. The U.S. is running a massive current account deficit, and you see the places with surpluses like Europe, like Japan, getting a bid that's unusual. And even today, the commodity currencies are strengthening despite this rout in markets that's accelerating. With
the commodity itself, throughout most of this year, when things would pull back and get a little tumultuous, gold wouldn't seem to move much. And I've talked to a lot of people who follow gold about why that had broken down. But today, that trade seems to be on. Money is actually moving into gold.
Which is bad news for the rest of the market. I mean, you have that safe haven, and it's been such a poor trade since April, May in gold. And anytime we get weakness, even in emerging stocks, you don't seem to get a bid into gold. But, we broke some major levels in China overnight, down to the lowest since 2016. And you have now a sudden bid coming, starting, I think, in emerging markets, but now in the developed market. If you look at your options out there, equities are losing money. Bonds are falling, right? The yield rise, the price falls. So at this point, it's saying that investors are just looking for any sort of safe return, zero return environment. And gold now is broken above the late August highs. If we close, I think, up $15 or $16 today, it'll break that. We're up almost 40 at this point. So safe to say that's going to happen. And I think we might see a tailwind in gold through the end of the year.
Now, as I look at the Dow on my screen right now, the selling is starting to intensify. We're down more than 600 points on the Dow. That means we're about 7% or so off of the recent highs, the all-time highs we set earlier this month. A lot of people, well, maybe a lot of people. A lot of people are looking to the Fed and what they're doing, and the President of the United States said that they're gone crazy and that they're loco. These are interesting times to be a central banker.
Interesting vocabulary as well from the President. But there's really 2 points about this. One is that the Fed is independent. I think half of Trump's cabinet would quit if he were to meddle at all in the Fed. But the Fed also wants to have the appearance of objectivity, and that might harden their resolve to hike rates. In times past, you might have had someone from the Fed try to calm markets right now. But I think now they might be a little bit wary of that for having the appearance of being bullied. And second, now we're seeing Trump's playbook. This isn't going to be the only stock market drop in the next 2 years. And God forbid we actually have some kind of bear market. Trump is going to be taking shots at the Fed repeatedly. And I don't think that will change policy, but in the long term, it erodes that credibility, that faith. The average guy in the street, he doesn't really even know what the Fed's all about, but suddenly it's going to be public enemy number one. And, whether it's Trump or whether it's someone down the road, that's going to impinge on the independence of the Fed and hurt the U.S. dollar.
Now, when I think about the Fed as well and the actions that they're taking, when you take a look at the U.S. economy, I mean, at what point, I guess the question becomes, can this stock market stand on its own 2 feet? We know that cheap money has been propping it up for a decade now, and you take it away and people start screaming bloody murder. But at what point in this economic cycle, with the American economy roaring along this strongly, can we expect equities just to go on their own?
Yeah, it's been a joke in markets for as long as we've been doing this, that the Fed will always come to the rescue. And, you think at some point the Fed will say, sink or swim, whatever, the stock market can fall 10%. And they like to pretend they're going to do that, but time and time again, they roll over. So whether it's today after another 600 or 800 point drop in the Dow, or it's tomorrow or it takes another week of it, the Fed will ultimately blink at some point. And I think as an investor, you have that in your back pocket. If you find things that you like. And in the currency market right now is also saying, it's not that bad. You're not seeing any major dislocations. The New Zealand dollar is the top performing currency today, and that's generally, it would be the opposite. So there isn't that widespread panic. I think it started with tech. Tech got a little ahead of itself. This is really an equity-only story, not an economy story, because the news has been so good on the economy.
Now, when you take a look at the other currencies worldwide, we've spent a lot of time this year talking about the emerging markets. And, of course, part of the fear there is a strong U.S. buck. We're not getting that. How does some of the emerging markets start looking at?
Yeah, well, that's that borrowing costs are hurting emerging markets. We had the IMF last week, or earlier this week, downgrade global growth. And there is a little bit of fear that that trade war is going to hurt global growth. And we're not quite sure how, right? Because again, we don't have a trade war playbook in a globalized world with how to deal with this. Maybe we get more stimulus, maybe we fly through. And I think in the week ahead, even starting with tomorrow, commentary from executives is some of the best real-time reads on the economy. We had Caterpillar earlier this year say this was the high watermark they thought. And that's the kind of comment that you hear people repeating over and over right now. And if we get a few other executives saying, listen, we're seeing a real slowdown in global growth. And I think that's probably the tell where it spills over into currencies, spills over into kind of the broader markets, and even makes it worse in equities from here.
Right, Adam, always great to have you here and walk us through this stuff.
Thanks, Greg.
It was Adam Button, the Chief Currency Analyst at Forex Live.